Good morning, friends. Nalnakshi Swami. I just want to highlight some important facts in the Indian market, what is happening in the Indian market. Actually, I'm going back to the date of 25th to 26th and 27. You can notice that all the price action which has taken place in the market on 25th and 26th, 27th, you are not noticing any gaps over there. They are engaging, big players are engaging all the retailers in this area, and after accumulating the shares, grabbing the shares from them, a slight up move was seen on the 28th, creating an illusion as if it is just forming a pattern like an head and shoulder. Neckline, you can see the neckline. These are the patterns created in the market, and the people will get all the technical people who have learned technical analysis. They will think it is a sell and rise, and they will not take any position in the market, a long position. The long position has been built over here. After building the last position, you can see on 28th the price gaps up above this level, and people, so even though they get the chance to enter into the market, they go wrong footed, because if I go to the 15 minutes time frame, the rise is very slow, and the angle is very small on this one. So this type of movement, traders cannot go think a proper way. They will try to sell whenever they see red candles, thinking that it is becoming overbought or anything. People are induced to take the put option or anything. Even that on that day, around 2 o'clock, there was a very huge sell. But if you have one indicator which will suggest you to hold your position is the anchored VWAP. See, if you see this anchored VWAP, the price after moving away from the gapping up, it has not come to the VWAP at all. Now, the price is very away from the VWAP, and probably after reaching the level of 17,329 to 400, there may be a mean reversion to the VWAP or to the level of 16,933. See how you can trade. See, when the market gaps up, this is the way market is gapping up, and the retailers get wrong-footed. Even on Friday also, market, people could not take position. The range was very narrow. After the trendy day, 2 days trendy day, it gapped up and traded in a very narrow. This is a consolidation that happened in the market. It is very difficult for the retailers to go which way market will go, where the market is going to. So one tool we can use is to see that you apply this one. See, this is the sell node you are getting actually. But where the trend is emerging, you cannot make out. Even with the profile also. Market profile, it cannot plot because there is a lot of space over here. No trades have been taken place. When no trades have been taken place, it becomes very easy for the big player. They can halt anywhere. See, in between, they can halt anywhere. But the only solution for that is go to the hourly hourly or 4-hourly. Let me go to 4-hourly and apply the volume profile. See, when market has traveled from there, take the volume profile from here to this swing to this swing. So you will get a high node area and also low node area. Okay. Low node area. And also let me take this is how I try to find the levels in the market. There is also point of control is here. 17,996. Okay. 96. And price is here near the value area high of that comes to 17,390. Okay. Now, where are the levels for the okay, point of control is around 17,009 and low volume area is 17,192 and low node area is around 17,123. Okay. I'm getting a level here if I go to the volume profile. That comes to, let me extend this. Okay. So I got the level. See, you should be, okay. Then I'll come back to the hour market, live market on 15th. So you got the level by going back to the history where Nifty can, because there is a void. You cannot take the trade and you should know where the levels are there. So I got the levels going back to the history on the volume profile. I showed it to you and I marked the level. So when I'm now at present, I am on the 15 minutes time frame. Okay. I'll change the time frame to 3 minutes. 3 minutes and I'll start observing the price action over this area, because this area I want to see what the price action will do. I know the levels and what the price action will do, whether it is going to fall below this level or going to hold this level. So you can see price action over here. There was a huge sell-off and also you can see a big volume candle matching with the volume, the spread is also high. After reaching this level, there is an high volume green candle. Almost volume is above the sell volume. Volume is above the sell volume because part of it is short covering. There is a level over there and this candle, actually this is a clue. It gave clue, halt in the market, buyers are stepping in. So immediately you should not act on this, and later the market continued its level downwards and you are seeing a sell one, increased volume in the sell. So you got a clue over here, increased volume in the sell, and the next candle is green candle. So this is the candle of importance. This is the candle of importance. I'll mark it with yellow. Okay. I'll mark this with the yellow color. I will change it. And mark so if this is the area of my interest and where the price can halt over here. So I'm watching the price action and also together with the volume change. So I am finding some sort of reversal in this area. This was the trap of these buyers, and the market came down and a buyer is coming inside. So you mark this level. This level is very important. Take the level, mark the high and low of this level. I'm still in 3 minutes time frame. Mark the high and low of this level, and this sell volume was conquered by this big green candle with the increase in volume. You can see increase in volume. So you can go long. I've got a green signal in this. You can go long in this because this zone has been cleared by the buying candle and also moving above the sell candle. So this is a signal to go long. Let me mark with the RT and let me come back to the 5 minutes time frame. You can see a big huge candle, buy candle over here. When you see a big buy candle, this level becomes the support. So it took the support and you can see a rejection from this level. Rejection, probably it will live market. It came with a sell candle, but when you noticed this volume, this sell volume is less. So these are the no demand bars. No demand bars with less volume. So like this, you identify a zone. Don't make mistake. Identify a zone and go to the lower time frame and start noticing the price action with the volume and then take your position. Suppose if you would have taken position around 1040 or 1043, exactly it matches with the buy volume. Okay, 1043 in the lower time frame, it is showing a buy volume. Later, after there was no momentum actually. See, they created a top over here. The market traded in a range for nearly up to 1255. There was no momentum in the market after this big candle. So, which level becomes very important for you? This level is the level for us, which is important, and it is the level it should be held. And also another indicator, I'll take the VWAP, anchored VWAP. Anchored VWAP also sometimes confusing because the big players, they push the market below the VWAP and we will be in the illusion that market is going to, it has become weak before when it comes below VWAP. Even if you take the data or anything, they will say it is a sell actually. Sell. But when you know this level, this is the important level. Over 1 hour, it is holding this level, then you can go long. When it comes to this, it gives in an intraday dip. Again, it has given an intraday dip and it is given an opportunity to go long. Around 2:15, the market picked up the phase. Again, same price action, stopping here and going sideways 10, 15, 20, 30 till 250. Till 250, there was no momentum picking up. But finally, around 3 p.m., you can see a huge candles, big players entering into the market, taking the market up, and they closed at the level of 219. This is how, when the market falls into a range, you can go for the previous levels and make your analysis with the help of volume profile and also reading the price action. See, you can see after this momentum in this area, the market has gone sideways. This was the high volume candle, trapping candle actually. This is a trapping candle which has come at the top. When trapping volume comes at the top, you should be careful actually. From there, market try to retrace. You can see a big sell volume. After big sell volume, the market trapped actually. It went down and you can see another big sell volume. Big sell volume. Let me go to the again lower time frame, 3 minutes. You can analyze this. Market was falling like this and a buy volume, and this is a huge sell volume on this. This is the huge sell volume, and this volume is a buy volume, and this volume is also a buy volume. So you are seeing a signs of buying over here, but the buyers have been trapped. This is what happens in the market. They trap the buyers, then finally short covering will take place. So trapping has taken place, and this is the trapping sell volume. And when price starts moving above this trapping sell volume, trapping sell volume, same price action. See this, the cluster of same price action repeating over here. And you know the levels. Around this level is the buying candle. So you mark this level. If you mark the level, you will not have confusion. Let me mark this level. Okay. See, this was the candle responsible for the up move. You can see it tested this level. After breaking above this level, it tested this level and there was a stop loss hunting. So here this area is this level is very important. If you have that level in advance, because this is a level and reference, and watch out the price action near that level. And if you can see break of the structure, I'll zoom it out. You can see break of this small structure, sell volume, buy volume, break of the structure, retesting of this level, which is the trigger candle here. This candle is the trigger candle. So you mark the high and low of this trigger candle and you know the level. When price came into the, let me say, price came into this level, that is the retest of that level, and price took off to the higher side. This is how you can be saved by, and you will not have any confusion. You can go long. Actually, usually in the market, first hour and second hour only you can see momentum in the market. This was the momentum they captured to trap these buyers. So when you have gone long in this level, you can hold the level by keeping the stop loss below this level. This is how one can trade in the ranges also. Range, you will not be knowing. It is a confusion actually. Range is a very difficult area to judge where the market is headed. Sometimes all the traders will have the fear that range can break down because they created a situation in the bank nifty as if it is going to go down but it was not really, it was not a sell off or anything. It was a correction in the bank nifty because bank nifty hit the resistance before the nifty. That's why that type of price action was seen on the bank nifty. Okay friends, thank you very much. Nalinakshi Swami signing off here, and it will help you to judge properly, see the price action properly and trade. Thank you very much.